What is up, everybody? Welcome to everyone joining from Benzinga's live trading. I'm your host, producer AB, on another episode of Benzinga Live, a special episode of Benzinga Live. Today's episode is brought to you by Kaiju, and I've got Ryan Pinnell backstage from Kaiju Investments with me. We're going to be talking about AI, the hottest topic in 2023 on Wall Street so far. So I think without further ado, let's go ahead and roll that intro. And we come back, we'll be talking, and Ryan will be talking all things AI and about what Kaiju does. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. All right, Mr. Pinnell, how are you doing this morning?
Good. How are you doing, Aaron? Thanks for having me back.
I'm good. We're here in sunny Detroit. I understand you're probably a few hours behind. It's probably real early for you, huh?
I wouldn't say real early. It was real early, but yeah, it's a little earlier here on the west coast of Canada right now.
Beautiful. Well, I hope you guys are you guys being impacted by the fires over there at all, or?
We've usually got a number of fires burning in the summer. This year's been pretty good about not dumping the smoke this way. We've not had a lot of rain though, so it'd be good to see that roll in. Not something I would normally say.
Okay. Well, yeah, we've been following the news here because there's been a few times from the more like mid regions of Canada. We've gotten some smoke down here in Michigan from there. But Ryan, let's hop into it with Kaiju. I know we have the link and everything in the description, but can you just give us a brief overview of what Kaiju is, what you guys do?
Sure. I mean, we originally started as a private fund manager, which is something that Kaiju Capital Management still does. And we were an early adopter of AI. So I'm going to get boring by constantly saying we've been doing this long enough to have been made fun of for it. I think this is the fourth time I've said that, but it's true. I mean, it's not that long ago, like 2019, you tell somebody that you make endpoint investment management decisions with AI, and it was like, you practice the dark arts. You got lobsters crawling out of your ears. They would just look at you like that was insane. And now today, that doesn't seem so insane. And we moved into the ETF space last year after we noticed that the technology just wasn't really showing up on the public fund side. It was becoming more available. I wouldn't say common on the private fund side, but on the public fund side, there were some early offerings with thematic exposure, but nothing that was really harnessing the power of AI to make the endpoint investment management decisions. We weren't sure why that was. The more we looked into it, the more we realized that derivatives manufacturers that focus on ETFs just don't have that capability, and AI is an extremely heavy lift. I mean, it's taken us years and years to build the infrastructure that our systems run on. That's become easier more recently because obviously the technology is more powerful, but it takes a long time to set up that kind of system. Talent acquisition is another real challenge. There's no such thing currently. I mean, I'm sure there will be, but there's no such thing as like an AI degree, right? I mean, you don't see that.
How do you find experts? How do you find experts in a field that's only a couple years old?
Exactly, right. And I mean, you've got our director of AI systems, Nicholas Sobrian, like he's got a master's in machine learning from 1994. So like the technology goes back a long way, but in terms of its current level of application, no, it's relatively recent. So what you're finding is, derivatives mathematicians, physicists, cryptographers who have used AI in their discipline and then are coming to, financial market management, et cetera, bringing that technology with them. So a lot of the talent that we pull out of Imperial College or University of Zurich, like has never worked in financial markets before, but arguably they got expertise in AI. It's probably
interesting. Yeah, that's something you probably don't think about a lot for a lot of these AI companies is the recruiting and talent acquisition process. But I'm sure it's not easy, or at least not. I don't know if it's easy, in a lot of fields, but it's probably a little bit more difficult here. Ryan, how does AI improve? Like, how do you use AI to optimize fund management? And you guys were doing this before before the public side, when you guys were still just being a private fund. How are you guys using AI, and how was it used to optimize that fund management?
That's a good question. I think the easiest way to start to answer that is to acknowledge that, AI is not good at everything in fund management. So, answer number one depends on what type of fund you're running. We ran quantitative funds from the very beginning. So we were never global macro. We were not sort of fundamental investment managers. So for us, the transition early on just was a natural evolution. We believed in the profitability of identifying specific patterns and being able to predate on them. And AI is fantastic at that. If we were running something that was more global macro, fixed income, something where a deep knowledge of the financial market response to big socioeconomic changes, or interest rate fluctuations and quantitative easing or sheet tightening, like guys that run those kind of funds have decades of experience and a deep well of knowledge that they can draw from in terms of how the world might react to an event or a new scenario. Whereas on our side, we are just picking up the patterns that come from those events. Ultimately, any event, any change in interest in an underlying equity in a market, et cetera, is going to show up in price, time, and quantity. And that's what we're looking for. And AI does that well. Like, it does the number crunching, the filtering, the culling really well. It's awful at context or nuance, which you see from GPT and the echoing challenges. It's a pretty cool mimic, and it's extremely powerful in that implementation. But there are moments where you're going, what? Because it's guessing, right? It's guessing what you expect to see next, and it's trying to.
And I think one thing is when people, I think, are almost like too hard on the AI when it does make it, even on ChatGPT, if it gives the wrong answer and makes a mistake, I think people like need to realize how these things learn and get better is through making mistakes. And then we're such in the early stages that right now it's clear as day that these things are just going to continue to get more powerful, more advanced. So bringing the AI to like a tangible trading example, DIP, your ETF DIP is AI powered, and it's kind of centered around this idea of buying the dip. So how is AI implemented in doing this? Is it as simple as like, okay, if the stock goes down 20% in a week, that's a dip, we're going to buy it? Or what exactly is the AI doing here?
Yeah, so I think the important thing is to start by identifying what's a dip, right? Because everybody has a different definition of what a dip actually is, and it's not.
I get scared when I see my portfolio down 1%.
Yeah, exactly. And there's some people who are looking for like any retracement of like 8 or 10%. That's a dip. I'm going to buy that. It's like, yeah, but what if that's the appropriate retracement from a massively overvalued underlying, right? Like, you're buying back into fair market value. You're not buying a dip. Not every retracement is a buying opportunity. So, when we talk about dips, we're talking about an artificially oversold condition. And I continuously forget that is not an obvious definition. So we came up with this analogy that made that sort of simpler to understand. And so imagine that there's like a basketball floating in a swimming pool, right? And that's your, at any given time, fair market value for an underlying. Now, you can add more water to the pool and the basketball will go up. You can remove water from the pool and the basketball will go down. Water represents the general consensus of the collective of market participants that are in that underlying. So that's where it wants to live. It's not going to stay there, but it requires the water in the pool up or down to sort of maintain an even level. Now, if I come and I put my hand on the ball, I stuff it underwater, it's going to be under the surface of the water, but only so long as I continually apply that pressure to it, which I can't do forever. At some point, I'm going to let go. It's going to pop back to the surface of the water. The same works the other way around. I can lift it out of the water, but I'm not going to hold it there forever. Eventually, I'm going to drop it. It's going to fall back onto the surface of the water. So what we're looking for is the hand on the basketball under the water. This artificially oversold condition that can occur with HFT downside overflow, liquidity pockets and voids being predated on. It's a temporary collapse in share price that's not really related to the consensus on fair market value. So we are looking for that pattern, which is fairly reliable. We identify it, we buy it. When the pops back up to the surface, that's when we're gone. So this isn't timing the market. AI is awful at long-term investing. It has no idea what's coming in 3 months, but it's pretty good in a short-term time frame because those patterns, the integrity of the patterns hold up. So that's exactly what it's looking for. It's taking largely S&P components and huge index ETFs. It's identifying this temporary oversold condition, buying, ball pops back up, exit the position, wash, rinse, repeat, rebalance daily.
Got it. So how much in this fund is actually being managed by AI? Like, is the AI the one executing the trades? Is it giving signals and then humans are the ones executing the trades? Walk me through kind of exactly what's happening there.
So the AI system, I mean, and when we say the AI, we refer to it as the AI system or the machine or whatever. You're talking about like thousands of independent neural nets with discrete jobs, right? I mean, we just say the machine or the AI to make it easy. But you've got regime classification engines that are trying to determine what regime this underlying the sector, the broad market is generally in. There's several of those. We run a regime change detection engine, which is constantly trying to determine, based on what it sees right now, what does it think is coming? And then obviously on every single underlying, we run discrete engines on multiple levels, both looking for that artificially oversold condition and then sort of the checks on, is this a regime that's favorable to this pattern? Should I pick this? So the AI is doing all of the curation and the trade direction. It does not do the actual trading. That goes off to a portfolio management team, and that's executed manually. Now, that said, there are layers of quality assurance there where we're making sure that there's no obvious error. But you're talking about a system that every day takes 220 terabytes of data and performs 2 billion discrete examinations. Like, in terms of a human's ability to say, gee, I don't know, maybe the weighting there just seems a little off to me. There's no chance you're going to outperform the machine when it comes to those determinations. So yeah, the AI does the curation and direction. We make sure that it doesn't contain some sort of horrible critical fault, some sort of technological breakdown, and a PM team executes. And when we say, it does this at a nanosecond scale, it's the analysis that's performed at that scale, not the trading. We're not a high frequency trading firm.
Understood. So, right now, I mean, I mentioned this on the top of the show, but on Wall Street this year in investing, AI has been kind of the story, the biggest thing. It's been driving, a lot of the stock market moves that you've seen in stocks like Nvidia. Whatever. So you have a lot of people on CNBC and stuff now that are financial experts that are talking about AI. And I don't know, how many of them really understand exactly. Myself, I don't understand a lot when it comes to AI. What are the biggest misconceptions out there right now when it comes to AI?
Well, I think there's a couple. One, the doom and gloom scenario, right? There's a lot of disquiet around it. Is it going to end all these jobs? Is it going to take over? Is it Skynet? Are we all getting nuked at the end of this? And it's understandable because it can be a bit of a creepy technology. We once fed an output mechanism with 3 years of our trader chat so that the AI could talk to us more effectively. It's sort of an earlier generative version of Chat GPT, and it was eerie, and we eventually turned that off because it was a little odd, and it turned out we were pretty rude. So was the AI that was talking to us. But when you work in this field, you realize, or you obviously know, that it can't do anything that you don't tell it specifically to do. So if you had a late stage version of GPT-5, and it could actually talk to you instead of just outputting text, there's no capacity for it to suddenly, in the middle of that exercise, start speaking a foreign language because it felt like it. I mean, you might, in this interview, you might absolutely switch to some other language just for the hell of it. But you're a human and you have complete autonomy and you could do whatever you want. But the AI would need to be told, first of all, it would need to know how to speak the other language. It would need to be told that it can speak another language. And it would need to receive some sort of rule set on when it might want to mimic a random condition and speak the other language. Like, unless you program that all in, that can't happen. So it can't blow up the planet unless you give it permission to blow up the planet. In the investing space, I think the fear is that these AI systems are all black box. Black box meaning that there are no rules and guardrails, that the AI system is simply allocated a huge pile of money and it trades whatever it wants at whatever frequency it wants. And those firms like Renaissance Technology has been doing that for 30 years. And that's why they have a 67% average net of all fees for all 3 decades, because black box systems are hugely powerful, but they can also have 70% drawdowns. So, if you're a responsible manager using AI, you're not going to run a black box system. You can put rules, guidelines, controls in. DIP has dozens of them. It can't just do whatever it wants. It has specific sector weighting guidelines. It can't unbalance risk to one side. So one side of the AI question is, the terror around it just running out of control. And I don't see that really happening unless we're irresponsible and give it that kind of latitude. We just take off all of the guardrails, remove the handcuffs and say, yeah, no, complete trust, go for it. But I don't see people doing that right now. I mean, if it's really profitable, history will tell us that they will do that, as I think you've seen before. We saw that in crypto. But that's the biggest misconception I think is that. The other is that it can do everything, which we've covered. It's not great at everything.
Right. And I think, it was interesting seeing Sam Altman, of course, the CEO of OpenAI, basically begging Congress for more regulation in certain regards. And I think, seeing that, okay, if used properly, it's going to be, great. And like you said, as long as certain people aren't just trying to profit, do things that aren't great with it, then I think that's why Altman was kind of like, yeah, maybe some guardrails on here would be good. So Ryan, what right now, I mean, how do you think we're seeing how you guys are using AI right now in terms of fund management, but let's look down the road 10 years, assuming AI, the AI networks improve in a lot of these manners in financial markets. How do you think it will be implemented? I mean, like you said, we've seen quant trading now for 20, plus years. What do you think about 10 years down the road?
I think 10 years is like, an ice age in AI time, right? I mean, I think you could speculate wildly in the 3 to 5 year time frame. 10 years, we could all be just driving around in AI directed cars, I suppose. But in the shorter time frame, I mean, the exciting thing for us is that the infrastructure is becoming more available to the average person, right? It's still horribly expensive to build one of these things and cumbersome to run an AI shop. But I'm hopeful that you'll start to see some tools trickle down to the retail level where, you can back test your own strategies. Like, you have an idea, you've had success trading in a certain way or managing a portfolio in a certain way, and you want to see what that would have looked like, 10, 15 years, that kind of a time frame. And I mean, there are tools to quantitatively do that, but quantitative backtests are garbage. They're just fallible on every level because the testing mechanism has the advantage of the future knowledge. And I think what people don't know is with AI systems, when you're testing these models, you train the model, you rewind the stock market 15 years, 10 years, whatever you're going to do. You basically give it amnesia, and then it's only left with the decision-making capabilities. So you play the market forward. I mean, we play it every day at the tick level. So it's looking at every print of every stock that's ever traded and making determinations as if it was in real time. That's a vastly more robust way of testing something. I'd love to see that come to the retail space. My fear, of course, is that you're probably first going to see AI robo advisors. I was so thankful when they died out, and now I think you're going to see them come back. It'll be like, yeah, hey, just throw $100,000 into this and let our AI manage your portfolio. And again, it's not good at that. It doesn't know you. It doesn't know what your risk appetites are. Diversification is your job. I think it's great if you can invest in discrete funds that employ a strategy successfully that you like, fills a niche part of your portfolio. But handing over the keys completely and then walking away, I don't think it's ever going to do that well in the short term. I mean, I'm curious what you see on the news side from retail. Like, what would you say is the general outlook or fear or interest right now when it comes to AI?
Honestly, I think from a lot of what I've seen, and this is more on like social media compared to the actual news. I've seen some, people basically being like, "Oh, you're not hearing about Chat GPT as much anymore." So I think like a lot of these things are kind of like behind the scenes. Companies are starting to figure out, okay, how are we going to use this? This is super powerful. But I think just on the consumer facing side right now, actually, I think a little bit of buzz has died down, at least in regards to like Chat GPT specifically, because that's the one that everyone got taken by storm by. I don't know when this was, back in like January, February, 5 months ago or so. Um, and so, I think people are really starting to, from the investing side, it's still pretty much all anyone can talk about. You have Nvidia, you have C3 AI, you have all these different publicly traded companies that people have been buying up. Upstart has been on a tear, which is using AI to try to basically qualify people for personal loans and whatnot. But I mean, it's going to be fascinating because I think like ChatGPT, every time we see one of these new iterations come out of something AI related that shows its strength and shows how powerful it can be, people will just continue to be amazed by it until it's ubiquitous, like you said.
Yeah, I think the fade with GPT is the same that we've seen with the mathematical side of things. It's really good at some things, and GPT is sort of shockingly good at mimicry, right? And for something like a university paper on Napoleon's failure at Waterloo, I think it does a very credible job with something like that. But for something that's really nuanced, a heartfelt letter to a loved one or something, if you've played with it's not great at that. Like, the prompt education is really important. It needs you to provide more and more guidance. But I think when the flash of what it could do, sort of faded, and it's like, well, when am I going to use this in day to day life? Some people, we know, use it extensively, in day to day life. Our dev team uses it constantly. It's pretty fantastic at writing code and
For
doing heavy
coding,
lifting
yeah.
that they can then look over after the fact. So you keep the
Tweak it
experts
from
doing the
there.
expert stuff. Right, exactly. So, same thing that we see, you sort of push it, and then it blows something up and you think, oh, too far right now. So, I think that's
Yeah,
where we're all at.
I think people got swept away because it was better at Google than a lot of things. But like in my day to day, I'll use ChatGPT instead of Google for maybe like one or two things, but still 98% of the time, I'll just Google something, so it wasn't like this overnight takeover. People on Twitter and stuff are, oh my God, Google's in so much trouble. And it's like, I mean, yeah, like you're gonna use ChatGPT for a few of these tasks that you can't just use Google for, but for just searching like, how late is this restaurant open? Google still does a pretty good job of that. So, well, Ryan, I know we've gone over, but I think, for now, this has been a great introduction. I know we're going to keep doing this and probably get a little bit more into the weeds of certain things, but this has been a great introduction to Kaiju. Thank you so much for joining Benzinga Live today. I'm looking forward to our future conversations.
Absolutely. Thanks for having me on again. It's been fun.
Awesome. Well, Ryan, enjoy the rest of your day. Hopefully you guys stay clear of all that smoke and fire in Canada.
Yeah, let's hope. And sorry about that.
Oh, no problem. I mean, it hasn't been too bad. There was a week toward the end of June where it was pretty. Here was my biggest complaint, which I know like this isn't something to joke about because for some people that have breathing problems can be more dangerous. But for me, the biggest thing was it was super like gray out, and I was golfing, and I couldn't see my ball because the sky was like the same color as the golf ball. The smoke behind it was kept getting lost in the sky, and I didn't know what to do.
Yeah, I mean that's you got to adapt. That's what you got to do. That's what I don't
You
know.
got it.
Some famous golfer probably said that.
Yeah, I gotta buy a yellow one, I guess. All right, Ryan. Well, enjoy the rest of your Tuesday. We'll chat soon.
Great.
All right, that was Ryan Pinnell from Kaiju Investments. Excited to talk more about AI. I mean, it's good to talk to someone who's been in the industry for a long time, who's an expert, because you have a lot of people coming out now that are like, "Oh, I started this AI company and it's been around for a while." But because, like I said, like I've been following the AI story but I'm no expert in it. Brian is. It's good to talk to someone who has knowledge, again, not only about AI, but also financial markets. And he's going to help us understand exactly what's going on with the AI story. Again, if you want to learn more from Kaiju, I'll drop that link in the chat, kcm.ai. I mean, seems like they're doing some pretty cool things over there. I see my man Nick Brown hanging out backstage. I think we should go ahead and bring Nick on, see what news stories he's been watching today. Without further ado, let's go ahead and bring Nick on. Let's give him our little special intro. Nick, I was thinking maybe we got to get you your own intro, a little news by Nick or headlines with Nick, something like that.
Maybe if we can do that, that'd be cool.
All right, well, I'll see what I can do. When's your birthday? Maybe it'll be a little birthday present or something.
January 16th.
All right, you might have to wait a while then.
That's okay. That's okay.
You're oh shoot, that means it was your half birthday 2 days ago.
Yes.
Did you do anything to celebrate? Did you eat half a cake?
I did not. I did have ice cream though.
Like for your half birthday?
No, just for fun.
Oh, okay. Well, I think we should normalize celebrating a half birthday. I mean, I think it's, you made it halfway through the year. It's a big thing.
I agree. Maybe we should pitch that.
All right. Well, mine's coming up on November 5th, so I'm looking forward to that. All right, Nick.
Yours is already in the calendar because I have you in my contacts, so I knew your birthday was November 5th.
No, well, my half birthday is November 5th. My real birthday is May 5th. But we'll figure it out. Nick, give me your top 3 headlines of it. I'll be honest, I haven't really been watching. I didn't read my paper this morning. I'll just say that.
Earnings. We got a headline of earnings: Bank of New York Mellon, PNC, Bank of America, Lockheed, Morgan Stanley. That's been the morning. We have a few market facts. We have the Dow Jones at the highest for 2023. We have the KRE, the S&P 500 regional bank index, highest since June 7th. We have the transports back to an April 1st, 2022 high, and we have the S&P 500 bank index at a 4-month high.
Yeah, I mean, you're seeing, these regional banks. I don't want to, I got to bring Tim Melvin back on. We got to bring Tim Melvin back on. He's our regional banking expert. But I was buying a lot of these stocks, like the Comerica's, the Stiefels, the Colin Frost CFR. That was one that I talked a lot about on this show. I mean, the KRE index, like you mentioned, up about 3.9% today right now, just absolutely ripping. All these things, I mean, all the banks, it was basically like a couple of these banks, First Republic and Silicon Valley Bank, got way overexposed. And outside of that, the other banks were pretty healthy and already kind of trading at or below book value. And then they went down like 20, 30% on average when these other regional banks failed. And I saw that as kind of a buying opportunity. So again, I don't want to toot my own horn, Nick, but I've made some money on these stocks going up. So I'm rooting for the regional banks. I don't know. Maybe I should, ring the register and take some profits off the board at this point. But the problem with these stocks for people out there that are also in them, not the problem, but part of the reason I don't want to sell them at this point is because the dividends are pretty attractive on them too. So as the stocks appreciate, then the dividends grow. And it becomes kind of that double whammy where the share prices are going up and you're getting paid a nice divvy.
Well, I was going to say bank earnings for Q2 have actually held up better than expected. A lot of people thought that the banks were going to come in and not report as well, but pretty much it's been a beat on the top and bottom line since Friday. Because remember, we had Friday.
Not to cut you off, Nick, but you have to you might have to change your name. This is Easy Mike just dropped some fire in the chat. News in the nick of time. Have you ever thought about that?
I have not. Maybe we can think that.
Okay. I was just going to say, go back to what you were saying, though. I didn't mean to cut you off.
No worries, but I was just going to say earnings that started on Friday. We had Citigroup. I believe we got JP Morgan. We got Wells. They all did better than expected. Yesterday, we had a few bank earnings, a little bit. But then today, we had more bank earnings. We've had, Morgan Stanley, Bank of America, Charles Schwab. They beat on the top and bottom line. So And a lot of analysts do reference that if banks do good, since banks kick it off, we're going to have a pretty good earnings season. So I don't want to shed too much light that this is going to be an awesome quarter. But if you're at least beating on the top and bottom line, you're doing something right.
Yeah, I mean, I know Morgan. There was something about Morgan Stanley. There was something that their like trading revenue was down or something, but then the stock is up 6% right now, doing pretty well. It opened. I think it might actually went lower in the pre-market right off the report, but then has now been ripping higher. So it just seems like people are just scooping up these financials, like you said. Dow having a really strong day, XLE Energy having a strong day as well. Your Chevrons, and whatnots of the world. So financials and energy trading up today. Does that look like a market that is very worried about any sort of recession or any sort of economic downturn? I know there were concerns yesterday about China's growth, but that seems to have subsided today in the market.
Well, I was going to say Goldman Sachs yesterday lowered their recession target or recession percentage, I believe, to 20% from 25%. A Bloomberg consensus is still at 65% of a recession. Morgan Stanley's Gorman within the last, 30 minutes or so made comments basically saying it's hard to argue for more rate increases, says rate cuts won't happen this year, and a recession is less likely. So all of a sudden here we transitioned from we're pounding the table to we're definitely having a recession. I believe Goldman started at 65% at recession odds, and we're now down to 20%. And now you don't hear recession talks that much. Maybe if you do, it's just because they could be coming in the near future. But if I'm not mistaken, it was, I think, B of A that argued, could have been, it was one of the big banks that argued that we're just putting a recession. It's just coming eventually. It's eventually going to come, not because we keep pushing it back. Oh, it was the Journal over the weekend coming. Matter of fact, the Journal had a piece, Aaron, Wall Street Journal, early Saturday morning, basically saying that recession is less likely going to happen. And if we do have one, it's being pushed far down the road. GDP isn't contracting like it was expected. That's being pushed down the road. Inflation is coming down. The job market is holding up. And they're arguing, what is everybody worried about?
Yeah, I mean, as long as, here's the thing is I feel like with interest rates where they are, that there will eventually, it will eventually hit this kind of equilibrium or threshold at some point where it does start to, even if it not slow down economic activity, just the high interest rates start to kind of slow down the growth of so maybe not recession, but maybe you're just starting to see the growth slowing a little bit. Maybe those are signs that, okay, but as long as inflation's coming down, I don't see any problem. I don't really see a good reason to be bearish right now. I guess you could argue that the rally's just been so strong that we're due for a healthy little pullback, but that's different. Saying that you think there's going to be a pullback but remaining long-term bullish is a lot different than saying you think the market's going to go down 20, 30% or that there's going to be some big crash.
Yeah, I was going to say over the weekend, Ed Yardeni of Yardeni Research, he actually upped his S&P target for the next, I believe, through 18 months. He sees the S&P going, I believe, anywhere from 4,800 to 5,400. Tom Lee raised his target a week or two ago to 4,825, I think. And you still have the bears. You still have some bears at 3,700, 3,200. And you just have to kind of say, what are we missing? Are we missing something? Or do they see something that we don't? Or is it vice versa?
Yeah, I think right now bulls have clearly been in charge, but I feel like I wouldn't be surprised if maybe there's some steam rolling out of the bullish camp of people being like, okay, we've already been up, 20%, from we're only at this point. What's SPY at right now? SPY's at 5% off its all-time highs right now. So I wouldn't be surprised. Even here, I'll pull this up. I saw this the other day that on the AAII sentiment survey, which is all retail investors, the other week we hit our highest point in a few years in terms of bulls. We got up to 46.4% of people said their sentiment was bullish, and this is retail investors, so just people like myself. And that is, you can see right here, the 1-year bullish high. The 1-year bearish high was 60.9%. But this actually moved lower the next week, where people actually got more bearish, even though the market moved higher, which is typically the opposite of what you see. Typically, when the market moves higher, people become more bullish. When the market moves lower, people become more bearish. So I was surprised by that, and that's kind of was maybe a sign to me that some steam is starting to roll out of the bullish camp. I mean, look, this 41% is technically the lowest it's been in the past month or so on here. So, maybe some people are thinking, okay, we've gotten a little overextended, but to me, I as a bull, I like that. I like the fact that not every single person, it's not like 90% of people are bullish, because then that would be a sign to me, okay, now we're getting a little overextended.
But then you have to ask the question, what can the bulls, why are the bulls just going to eventually say, all right, we've done enough, we've rallied enough, we're going to calm it down? Don't you think they're going to actually keep going just to prove the bearish people that's been saying inflation's not coming down, rate cuts are going to happen this year? Like, they're just going to prove the bull or the bears wrong just because the bears haven't budged at all? I mean, I think it was JP Morgan's Marco Kalanovic yesterday. I don't know what he says, something about small caps, that they look good or something, and all of a sudden, erupting on Twitter, Kalanovic's turning bullish now. So it's like the bears aren't budging, and I don't think the bulls are going to budge to say, hey, we're going to slow this down. Nvidia is up 400% in 1 year, if that. So right there, the bulls aren't going to slow down. They just got another upgrade over at I think Argus today, up to 5, or B of A, I think they go to 550. It's just, there's the momentum that it's just going to keep going, and earnings, I don't think, is going to slow it down unless we get some bad report. But I still want to know why, if you're a bear, you still have an S&P target of 3,500. We're at 4,500.
I agree. I mean, I think right now, like, you would have to, I don't know. I think that I think if you're super bearish, some things out there that you could look at and be concerned by. But I think overall, you would have to, like, if you have an objective viewpoint on the market and what's going on, you have to say, like, okay, it is impressive that inflation's come down while labor has, remained strong, and that these stocks and I think, to your point of or maybe not to your point, but with Nvidia, I think it's like a good sign in the market that you haven't seen some huge pullback, that there is still appetite up here to own the stock. It's at $462 right now. And that will be kind of like, if I see Nvidia, like, okay, 10% drop off on Nvidia and it goes back down to like 400 or something, it's at 460 right now, that could be a sign to me that, okay, maybe a little bit of the steam is coming out of the market. Maybe people aren't as excited, but that hasn't happened yet.
No, it has not happened yet. And, Dan Ives from Wedbush, we are trying to get him on the show, I believe, next week, either Tuesday or Thursday. We're trying to get Dan Ives on, trying to get Fundstrat's Tom Lee on, even trying to get Ed Yardeni of Yardeni Research on, trying some big things here for Benzinga Live, Aaron, just because I join you so much. I'm like, I should probably contribute. I'm like, I contribute so much to the show. I should probably
I just got in contact today with a big name. I don't want to say it yet until I've got it confirmed and scheduled, just because I'm a little superstitious, so I don't want to jinx anything.
Right, but you got to reach out, and it doesn't hurt to reach out. But Dan Ives argues in a note on Monday that we believe a new tech bull market has begun to take shape, being led by the AI revolution, and we expect to see a better than expected 2Q earnings season for the tech space over the next few weeks. Well, we get Netflix tomorrow, and it's going to be very interesting to hear how this new $7.99 not sharing your password outside your home is. Are they getting more subscribers? I mean, I definitely think so. But on the other hand, today we found out Peacock is raising its price, and I don't think you can share your subscription outside your home. And that's the first time that's happened, that Peacock is raising its prices since it's launched. And so it's like the streaming wars are coming. Who do you pick? Do you pick Disney Plus? Do you pick Netflix? Do you pick Hulu? Do you pick Peacock? How do you go about picking your subscription bundle without spending so much?
Yeah, it's definitely tough right now. I think, a lot of people trying to figure out what the best way to kind of manage their different streaming subscriptions are, because I was joking about it the other week that it's like, at this point, you might as well just get cable again, because, I mean, you got to buy like all these different things. Actually, it's a good thing you mentioned Peacock, because I think I might have started a subscription on there the other day just to watch a specific live thing that was streaming on NBC, and I need to cancel it, but I think it was only like $5 a month, so I gotta figure that out. All right, Nick, any other top headlines that you're seeing today?
I was just going to say there's been some notes within the past week. So far since this week, Wells Fargo, CFRA, and UBS have basically all put out notes in regards to next week's Fed meeting. CFRA expects a 25 basis point rate increase next week, but they think an additional hike in September remains unlikely. Wells Fargo says, in our view, would be a via 25 basis point hike with indications in the post-meeting statement that the FOMC is prepared to hike further if economic and financial developments warrant. UBS is kind of on that path. It's going to be very interesting to see what the statement says, and then what the post presser says, because Powell does allude to a lot of comments in the post presser to the different reporters trying to ask and trying to get him to budge to say, hey, are we having another 25 basis point increase? What do you see long term? But still reiterating, no rate cuts this year. But what happens, and I'm asking this question too, Aaron, because what happens if we do see an uptick in inflation? It's not uncommon. What happens if in Q2 or Q3, with this wheat grain deal over in Ukraine, basically Russia's pulling out of it, it sent wheat prices soaring yesterday. What happens if inflation does pick up in Q2, Q3? Are we back to the higher for longer?
Yeah, I think it'll depend on a lot of things. It'll depend, A, how big is that uptick? B, where's it coming in? Is it coming in, these super volatile things like food and energy, or is it coming in rent? Is it coming in these different things? And so we'll have to see, but I wouldn't be shocked by it. Looking at CME's watch tool, it does look like, almost 98% we're going to see another 25 basis point hike at the next meeting. Also looks like, just in the past few minutes, the Qs have been on a little run here. The Qs have, since 11:30, was trading at 381.15, now at 382.15. So have gone up $1, about 0.2% in just a few minutes here. So watching that rally on the Qs, see Qs trying to turn green today with everything else, because I believe the SPY and Dow, are already in the green. So tech has been kind of a laggard today when it's been the leader. Financials and energy have been your kind of leaders today. So a little bit of a more Dow and value heavy day. We also, like you mentioned, we've got Netflix and Tesla earnings coming tomorrow. What do you think like the vibes are around Tesla's coming into earnings, Nick?
I was going to say Tesla's earnings estimates, and these are from Benzinga Pro. EPS is expected to come in at 81 cents. Revenue is expected 24.53 billion. And I did a quick search real quickly just to see where these estimates come up. And I believe EPS and revenue it's like, I think 7 or 8% up year over year. So it's like Tesla's still driving higher. But yesterday, I have in my notes, we got that the Ford is cutting their vehicles. And it was very interesting to see that a lot of people think that the Cybertruck and Tesla models are going to outperform. If you remember, I don't know if you saw this yesterday, but Ford announced that they're doing significant price cuts for all versions of its electric F-150 Lightning pickup. The Lightning will now start at about $50,000 at a roughly $10,000 cut. All versions of the EV will get the price of at least $6,000 as Ford works to boost production this fall. It is arguing basically, and the notes have said it all this morning. B of A argues that. Let me pull that up real quickly. B of A is arguing a more bearish interpretation could be that consumers are happy with their ICE vehicles and they don't want EVs.
That's interesting. I think with the thing with Ford's Lightning is that, so there are a lot of people in the United States, and this actually is backed by data, but I'm right now just kind of giving more of my opinion. I think there are a lot of people in the United States that drive pickup trucks that, are primarily using them just to like commute from their house to their office or whatever, that probably want the ICE, the, normal gas vehicles, the trucks. They like those trucks. And a lot of Ford's Lightning appeal comes with its utility, like as a real pickup truck. Like on a job site, you can use it to, power, you can use it as a generator. You can use it to charge your power tools, all this stuff. But I think that market of pickup drivers is actually a lot smaller than the bigger market, which is people that just like them more than cars and use them to go from the office to their house or whatever. So I don't know. It'll be interesting over time to see if more people catch on to the light or, you know, start wanting the Lightning, but I haven't heard much buzz about it. Rivian's been getting a lot of buzz. Of course, the Cybertruck's been getting a lot of buzz. So it'll be interesting to see who kind of wins this EV type of the EV pickup war.
Do you really want to be seen in a Cybertruck, though? Did you ever take a look at them? They look so ugly. And I argued this yesterday on live trading. I'm like, I don't want to be seen in a Cybertruck. I was on my way to New York over last week when we were on our way back. We did see Rivian trucks out there. So I can confirm Rivian trucks are out on the market. But like the other names like Lucid, Nikola, I don't see any of them, their vehicles out on the roads. And, you know, we have the Ford, we have GM and Rivian all trying to compete for EV cells. It's going to be interesting to see if Tesla can hold its dominance. And if not, how are Ford and Rivian revving up? Like, how are they going to be able to overtake Tesla? That's the real question. And do a lot of people want EVs? That's also another question BofA argues. Do you really want an EV, or don't you just want to stick with your normal electric or your normal vehicle that you just put gas in instead of saying, I got to go plug it in?
I'm down to I'm down to switch to if the electric vehicle has clear benefits to me over my gas powered one. Like, and I would need to see that broken down. Like, how much is my energy bill going to increase versus how much I'm paying in gas? Is it going to be more or less reliable? You know, all these things. And if like the pros outweigh the cons, then I don't care. Like, I'm not married to a gas vehicle or an electric vehicle. I'm only driving a gas car because that's what we have. You know, I was never like, you know, married to this in the first place. Like, it was just kind of what we have. So that's what I drive. So if the pros outweighed the cons, which I think for a lot of people, like, we have like Tesla charging stations here at the office. So I think a lot of people that drive Teslas to here in our office building will like charge them here, I think, for free. I don't know. Aaron, is that right? No, yes, no? It's not free. Okay, never mind.
I got to make my way up to Benzinga HQ. That's a goal in 2023. Not sure if it's going to happen or not.
You should, but either way, like, I think there are people that somehow, I don't know. I think some people are able to charge their Teslas for free some places, so they don't end up even paying like anything for energy. Like, they don't. Basically, if you can just avoid charging them at home, so your like home energy bill isn't increasing a lot. I don't know, but right now, yeah, my gas vehicle is fine. I actually get good gas mileage, so I mean that's good at least. That even when gas prices got super high, I wasn't paying that much. But yeah, I mean, I would definitely switch if it calls for it.
I was going to say, Aaron, take a look at Microsoft. They've added about 80 billion in market cap in just about 5 minutes. There's news.
Wait, yeah, holy shit.
I was going to say that there's news right now that they are charging for their AI in Microsoft Office. There's a report out in their press release basically saying that they are going to charge $30 per user for Microsoft 365 Copilot. That's according to a release. The company also said it would make a more secure version of its Bing search available immediately to businesses aiming to address their data protection concerns. But the voluntary upgrades is on top of public listed monthly plans ranging from $12.50 per user to $57, meaning the Copilot could triple costs for some Microsoft users. And that stock is literally taking off right now.
Interesting. Yeah, Microsoft is, let's see, it's trading at, it looks like it's coming down a little bit, 357. But even the Qs, I mean, the Qs just went, I was talking about that rally a few minutes ago. And then it just went parabolic and is up at the 383 level now, coming down also a little bit coming in, but looks like holding up. We'll be continuing to watch this one, Nick.
Yeah, it's going to be, I do pay for Microsoft 365 for myself. I pay the student rate just because I prefer a lot of their features and Outlook over Google and their Google platform. I know Benzinga, we use Google and it's okay, but I prefer the Microsoft just because I think it's more easier to navigate. And I'm used to the features since I've used Microsoft all through my school time. At high school, we have Microsoft 365. So I'm more of adapted to a Microsoft user, but I don't plan on paying any more than I do now for Copilot, just because you can use ChatGPT. But I heard your earlier conversation. Basically, we're not hearing a lot about ChatGPT now. And it's very interesting to hear why, just because I do know a lot of the networks that check papers for high schoolers. they are starting to pick up on the AI. And so that is one reason, could be that you could cite that we're not hearing a lot about ChatGPT, that this AI is not only causing more people to use it, but there's also now more firms that are picking it up. And so it can be easily detected.
Interesting. So, I mean, Nick, any other big headlines that you think we need to get to today?
No, just because we have to just watch the banks. We have IBM, we have Netflix, we have Goldman tomorrow. We're really going to be watching Apple just because there was a note out this morning. Let me pull this note up really quickly, just because they're basically arguing that Apple's quarter could be quiet this time. And so Apple reports late in August. Not sure exactly why it's reporting in August, early August, I believe August 3rd, first week in August. But this note this morning argues that Apple, this could be a quiet quarter, and this is coming from Jefferies. They're reiterating their buy, but they say it's expecting a quiet quarter just because after June, in which Apple set out its long-term vision of computing, this earnings call will bring us back to the reality of iPhone and services being the two most important drivers of the stock. Now, I don't know what kind of iPhone you have. I have the iPhone 13 Pro Max. I got it last year, and it's okay. It's just the battery has gone down very quickly. I think my battery percentage, if you go into the settings, is like an 89%. I am jealous because the 14 Pro Maxes, you have the interactive widget. I don't have that, but I'm not looking to upgrade anytime soon.
Yeah, I want to wait for the first iPhone that has the USB-C charging port, which I think either might be coming. AT, do you know? Is it coming next? Is that this fall? All right, this fall, we might get an iPhone 15 with a USB-C charger, which I think will mean the phone will charge a lot faster. The battery will probably be more powerful. So I'm going to wait for that one because I'm rocking like I think just normal iPhone. No, I know, but okay. Either way, sorry, me, AT and I were having a conversation backstage, but you know, the iPhone 15 coming out in the fall, USB-C will be coming in. I'll probably be waiting for that one because I think right now I'm just rocking with a normal iPhone 13. Apple? When does Apple report, Nick?
They report August 3rd.
Okay. All right, so that's coming in a little bit later. In the meantime, we'll get Netflix and Tesla this week in terms of big tech companies. What are the Qs doing right now? Speaking of, okay, still hanging out up there. All right, Nick. Well, thanks for hopping on. Thanks for sharing us your top headlines of the day. Always good to chat with you. Always good to see what's popping in your world.
Yes, thanks. We're going to see what happens for Thursday. We'll probably on this show we'll have Netflix reaction just because that's going to be that stock moves no matter what when it reports. So we're going to have to really watch Netflix, see what IBM's doing, see what Goldman Sachs is doing. Aaron, not sure if you heard, but there's reports that this could be one of worst quarter for Goldman ever. Semaphore and other outlets are reporting. So we're going to have to really watch Goldman tomorrow morning before the bell to see what they report. Do they raise the guidance? Do they cut it? What the underlying business looks like. So I'm going to be up early. Been up since 5:30 all this week, and that streak's going to continue tomorrow.
Holy cow. All right, Nick. Well, again, thank you for hopping on. We'll chat again on Thursday. Well, we'll chat before then, but you'll chat. Yes. We'll have you back on with the audience on Thursday. So excited about that. Probably going to be wrapping up the show here in a few minutes. Just, we started the show a little earlier today, which we will be doing going forward on Tuesdays at least. Maybe we'll just make that move on Thursdays as well and start at 11 a.m. Why not? No gap, and then we'll see what we do. But all right, Nick, thank you again. Enjoy the rest of your Tuesday, and we'll chat soon.
Thanks, Aaron. Thanks, everybody. Have a good one.
Peace. All righty, y'all. It's 11:55. We're going to go ahead and start wrapping up here. Benzinga Live, been live since 11 a.m. Just a quick programming note. So on Thursday, we will be, like Nick said, breaking down some of those other tech earnings. Next Tuesday, we'll be back live doing another episode with Kaiju. We've got Cannabis Insider coming up at 1 p.m., so make sure to stay tuned for that as well. As swing trade later in the afternoon, all the redirects and whatnot should be set. I mean, you got an exciting day kind of brewing in the markets right now. You got Microsoft with this huge pop that carried a pop into SPY and Qs as well. Everything moving higher. Your Dow Industrial Average now trading at its highest point. And let's see. I mean, shoot, is this the 52-week high? Yeah, I mean, yeah. 52-week high is 349.89. We are at 349.65. So we're 30 cents off the yearly highs in the Dow. Things are, I mean, I don't want to say stocks can only go up, but right now it sure feels like stocks are only going up. Nothing is bringing us down right now. So, all righty, y'all. Make sure to stay tuned for our programs. Like I said, the redirect is set. You do not need to go anywhere. We'll be back on Thursday. Peace and love, y'all.